Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's June 5th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. I'm such a big fan of the historical part of the financial newsletter industry. And you guys know by now, I talk about it a lot, maybe sometimes too much. But I grew up in this industry. My late dad ran his own shop for over 25 years. It was called FXC Investors. Initials have the same name. And he managed money and wasn't a big shop. I think we got up to about $125 million that we were managing, which I guess was a lot of money at that time. And 25 years ago. And he also wrote a newsletter for over 20 years called the FXC Newsletter. We had a little bit more than 10,000 subscribers. My dad charged less than $100 for the newsletter. And for me, I remember walking to the office in Queens, New York. It was like a 10-minute walk. It's a small office similar to what I have now. Not modern or anything. You'll see you come in. It's, for me, it's just like the fancy desk and big pictures and all your accomplishments and everything. I guess that was passed down to me, but I'm more of a show me guy than just, I don't know, everybody watching everything. I don't know. I just not like the accomplishments and trophies. Even when I got trophies, I never really displayed them. It just wasn't me. I was just, it was more about me inside than it was showing everybody. And I guess, again, that was kind of passed down. But I remember so much back then. And even my dad traveling to different areas to get the scoop on different stuff. It's a lot different than it was today, right? I mean, you have social media, everything there. You really had to have a boots on the ground approach. And I remember him going to Texas to get a closer look at a company called Texas Pacific Land Trust that I mentioned to you guys a lot. He recommended that in the single digits. It was over $800 today or whatever. It's still in my mom's portfolio, actually, which is really cool. It's passed down. But his 8-page reports, they need to be written on a typewriter. So he would write them out by hand in pencil in case he made a mistake. And then he'd give it to my mom, who was the fastest typewriter in the world. Just forget it. I mean, typist in the words is unbelievable. It's amazing. You have to see it in person. But she would type it up and then you'd have it. And then you'd have to bring it to the printer. There was no email or anything. You used to look at the best colors that would fit and everything. And, it was just this whole entire thing to the point where we got our own printing operation to make things easier at one point. But his newsletter was awesome. It had separated to 3 segments. It was an income and growth, targeted for one. The portfolios were aggressive and the other one was balanced, which is a mixture of, income growth, aggressive and everything. And I like the way he did that because it appealed to all kinds of investors. So he'd basically have, had closed-end funds that paid dividends, income, growth stocks, conservative, and very aggressive names like TPL at the time. Another one, Canada Southern Petroleum, Magellan Petroleum. There's probably 2% of the people out there that know those stocks because they follow my dad for such a long time and continue to follow me, which is amazing when I get those emails. People love those names, but he just have a mix of different portfolios for different people. And, if you were balanced, you'd have a couple of aggressive, a couple of growth and income, throughout the portfolio. But that's his business. And he got credited for calling the 1987 market crash, which I know every crash that happens, everybody calls, but he's the only person, I've done research on this, that called it in writing. And he put it in his September newsletter, titled it Crash. This crash is going to be bigger than the 3 previous combined. 1 month later, we had one of the biggest stock market drops ever, the Dow. And he had a ton of news vans outside, and everybody, it was, again, I described it as it looked like, we just got busted at a big drug deal or something. Right? It's amazing. It's just so many news vans, probably about a good 6 or 7, because back then, it was different. There was only about 10 guys on TV or 10 people on TV that listened to. And when they were on, you really paid attention. It was kind of like how Kramer's on today, where you really pay attention when he's on CNBC. Some people like his show Mad Money, but he does a great job when, he's on earlier in the day, and just breaks down what's going on with stocks and everything. And now today we have thousands of people. You don't even know half the people. One guy goes on and says the market's going to crash 70%. The other guy goes it's going to go up 30% by the end of the year. I mean, it's just back and forth confusion. It's insane sometimes. You're just watching so many people, and you don't even know half of these guys or their backgrounds or anything. It's just crazy. Back then, you knew exactly who the most important people, the most credible people were. They've been around for a long time. But getting back to that newsletter, I remember being in the office when I was young, and we had to fold it, right? So there's like 5 different things, and you take them, fold them, put postage on them, you stuff them in envelopes first, put postage on them, then take them to the post office. And they used to mail them out. And even marketing was done through direct mail. Again, there's no email. So it's amazing to see how much the financial newsletter business has changed. And you had a great show. You had the Money Show, which is still on today, which is pretty big conference. And my dad used to speak at events like that all the time. And 2 other people I used to speak with are Mario Gabelli, Louis Navalier. I know you heard of those guys. Probably both billionaires, if I had to guess by now. I met Maria Bartiromo when she was a kid, because after my dad predicted the stock market crash in 87, he was a fixture on everything. I mean, Bloomberg was just getting off the ground then. CNBC was just getting off the ground, and Maria Bartiromo was a kid back then. I was this little kid who had to hold my dad's hand across the street. In New York City, where he used to take me to all these interviews and sit in the side where he was getting interviewed, and they loved him there. It was great. On CNBC, the 2 biggest people on the show were Bill Griffin and Sue Herrera, who are still on CNBC, which is great to see. And great people, really, really cool people. They were always nice. They always said hello. How you doing? How's your dad do? Just really, really good people. And I'm glad they still on CNBC. Smaller roles, but probably by choice, because they've been doing this for decades and decades and worked their ass off and done a great job. Jim Cramer back then, he was managing money at the time and not such a household name yet. He was on a show, did Cullo, where they had Cullo and Kramer. That was a show I was on. Man, that's got to be 15 years old now. And I had my dad on that show before me, like on a regular basis. I was on Cullo, I think. I wasn't on Cullo and Kramer, just when Cullo had his own show. Cullo and Company, I think it was called. But it was Cullo and Kramer. My dad was actually on. He had Herb Greenberg on back then. I remember going on Neil Cavuto, where Neil Cavuto did a lot. It was all stocks now. He's got a lot of politics involved. But Neil Cavuto, kind of amazing, right? He looks like the same age as he did 25 years ago. Louis Rukeyser, huge name in the business. Show my dad used to be on all the time. And Warren Buffett was obviously big, but nothing compared to today. When Omaha and the amount of people that attend his event for Berkshire, annual, it's crazy. And my dad wrote a small book at the time, and it's not so much relevant today because it was just saying how you have to focus on the big 4. There was a big 4 accounting firms. It was called Awareness of Indirection. It was a really good book. But again, you look at the accounting firms, and they're all different today and different names and stuff. But really just a fundamental analyst. And he wrote the book, and it wasn't that many pages. And he sent it to Warren Buffett, and Warren Buffett wrote a letter back to him and signed it, a personal letter saying, "Hey, Frank, thanks so much for the book. I enjoyed it. It was great." And I still have that letter today. So when I look at the industry and where it was and where it's becoming, and just some of the people on TV and being involved, stuff like that always comes back to me, especially when it's coming to Father's Day, right, which is just a couple weeks away. And these are the things I think about. You think about the good things, and you're making your dad proud and everything, and you want to raise your kids great and all that stuff. But, the things I look back is when I was working at the office, spending time with him. And then like the last few years when he was really sick too, where I started taking this very, very seriously. And it was like a good 2-year period where he was just teaching me everything. And I just asked him millions and millions of questions constantly because he knew I was going to take over the business. And, just really cool stuff when I look back at it, and just the historical angle of the entire industry, and growing up in it is really, really, really cool. As you could tell, not that I'm getting a little choked up, but it's just cool when I think about where I was 25 years ago and sitting in the office and we have the Curzio Research logo every place, and following my dad's footsteps is really cool. And I'm bringing this up because I have an amazing guest this week. It's a first-time guest, but his name is Dr. Mark Skousen. And Mark is an old school guy. He has over 40 years experience in the financial newsletter industry, teaching finance and economics at numerous colleges over the past few decades. He's written over 25 books. Man, I can't even find the time to write one book. 25 books, lectured in dozens of countries. The producer of the FreedomFest conference, very big conference, and also the editor of the Forecast and Strategies newsletter. And this is going to be a great interview. Mark's going to break down the current landscape when it comes to the economy, tell us the three things that he believes could derail this 10-year bull market. I'm going to take a walk back in time, some of the things I just talked about. This Mark, again, is an old school guy. A lot of the same people who paved the way, at least the way I look at it for me, to become a financial newsletter writer. I was going to talk about some of his favorite income and dividend-paying stocks, and that's the focus of his Forecast and Strategies newsletter. And finally, Mark's going to talk about the FreedomFest conference, one of the biggest held in Vegas. Vegas this year takes place next month. I think it's the 17th to the 21st. We have 250 speakers. How many are going to be presenting? Because guys out of finance, and not just finance. I mean, you're going to have finance billionaires, top CEOs, just free thinkers, even actors, and really, really cool stuff. It's an awesome conference. That lineup is incredible. You've been doing it for such a long time. And it's even more incredible now because Mark, I'm very honored, and produced this amazing conference, which, by the way, is going to have, if I had to guess, over 2,000 attendees. But he invited me to speak at it, and I accepted. He's going to break down a Freedom Fest, tell you all about it, tell you you can go if you'd like to see me speak at it. And a lot of people, a lot of fun. It's a great, great, great interview coming up. Then in my educational segment, I'm going to talk about a strategy that I kind of mention a lot. But I just don't put a lot of emphasis on it, and maybe I should. I definitely should, because it's going to make you a great investor. It's simple. Anyone could do it. And I'm going to highlight an example that happened this week about how this strategy helped us, which when I say us, subscribers to Curzio Venture Opportunities, have a big winner in a portfolio, another 100% winner. Several since we started. We're doing very well with that newsletter. And this company just announced that it's going to get acquired by a larger competitor. And I found it because of this strategy. So really cool segment coming up. Trust me, it's going to help you become a great investor. And speaking of great investors, let's get to my interview with the one and only Dr. Mark Skousen. Dr. Mark Skousen, thanks so much for coming on Wall Street Unplugged.
Frank, it's a real pleasure. This is a first for me.
Well, Mark, let me tell you, you have a remarkable background. I mean, you wrote more than 25 books, consultant to Fortune 500 companies, lectured in 70 countries. You're an economics and finance professor where you taught at numerous colleges, at Columbia Business School, Columbia University, Barnard, Mercy, Rollins, Chapman College. Grantham University renamed its business school the Mark Skousen School of Business, which is really cool. And
yeah, I should tell you, by the way, Frank, that that usually, if you have a school named after you, that either means you're a billionaire or you're dead.
It's nice to know that you're a billionaire.
So that must make me a billionaire, although it's probably in pesos, not dollars.
That's great. And even with all of that, you find time to write several newsletters, which is signature one is Forecast and Strategies. These are just actually a few, Mark, of your accomplishments. And since this is your first appearance on a podcast, can you tell us from someone like me who's been in this industry for such a long time, and also learning from guys like you who've been doing this for 40 years, could you talk a little bit about your journey? Because over the past week, I've got to know you, and I could tell just by talking to you, you really still love this stuff, don't you?
Yeah, finance in particular is fun because every day it's different. It's not you wake up every morning with new information that affects the markets. Wall Street exaggerates everything, and there's an old saying on Wall Street. And so every day is exciting and it's challenging. I got my start in the 70s. I actually started, my first job was with the CIA, which was a really good experience working for the government and, the bureaucracy and how it works and so forth. It wasn't as exciting as it sounds, because I was on what we call the overt side, the economic analysis, but it was during a tumultuous time period of energy crises and inflation and recession and so forth. And my first experience in the investment world as a managing editor, after I left CIA, I was the managing editor of an investment newsletter called the Inflation Survival Letter. So I just got totally immersed in the gold bug environment of doom and gloom and alternative investing to stocks and bonds, and looking at gold and silver and Swiss francs and real estate and that sort of thing. So it was a real baptism of fire. And so some of my early experiences were with gold bugs and Cassandras who were predicting the end of the world. I'll never forget the story of Jerome Smith, who had predicted that silver would double and then double again. He was a gold bug that everybody really followed at the time. And I remember in 1975, he spoke in front of a couple thousand people in New York, and he said that within 5 years, the dollar will be worthless. And I wrote that down because I said, wow, what a prediction. And 5 years later, we still had dollars, and this dire prediction had not come true. And I was sitting next to Jerry for dinner in 1980, 5 years later, and I turned to him and I said, Jerry, what about that crazy prediction you made that the dollar would be worthless in 5 years? And he says, oh, Mark, you misunderstood what I said. What I really said was the dollar would be worth less.
Yeah, we hear a lot about it. We hear a lot of those when it comes to predictions these days, don't we?
Well, yeah, and it really taught me an important lesson. In fact, I was kind of excommunicated from the hard money movement and the doom and gloomers when Ronald Reagan was elected, and that's the year I started my own newsletter called Forecasts and Strategies. And I was really shocked how many of my friends like Howard Ruff and Jim Blanchard and Murray Rothbard and so forth, all these people were really down on Reagan, and yet he made such a difference. He, through Paul Volcker, stopped inflation, or not stopped it, but slowed it down sufficiently where gold and silver were no longer the big investments. We returned to stocks and bonds, and it was a real eye-opener to me. And my very first promotion for my newsletter, Forecasts and Strategies, was the headline was The Financial Shock of 1981. And you opened up the envelope and it said, Reaganomics will work. Sell your gold and silver and buy stocks and bonds. Well, that promotion failed miserably because people didn't believe it. And yet it turned out to be a great prediction. And ever since then, while I've always been cautious from time to time, and there have been major bear markets and crashes and so forth, overall, the long-term trend has been upward. And if you were a bear since Reagan was elected, you had your head handed to you time and time again, because the markets have been up a lot more than they've been down. And so I have kind of changed my philosophy over the years, and I'm more a believer. You asked me, one of your questions was about who has influenced me. And even though I got started in this gold bug movement, I've since become more involved with kind of a long-term perspective. So my people who have influenced me have been Jeremy Siegel of the Wharton School, who's written Stocks for the Long Run, Burt Maciel, A Random Walk Down Wall Street, who talks about efficient markets and buying index funds, Sir John Templeton, who I met several times because I lived in the Bahamas for a couple of years, who was a very long-term, bullish type of entrepreneur who believed in the American dream and believed in capitalism. So that's kind of my background. I've been through the difficult time periods. I've been through bull and bear markets, through boom and bust, through crises and so forth. And I tend to be more of an optimist now because of what I've witnessed over the years. It's easy to get varies from time to time, but I think the history is on the side of the bulls, at least when it comes to the United States.
Well, Mark, we've been in a 10-year bull market, and I love because you send me copies of your newsletters. I've been reading it, and I noticed that no, you're not a perma bear, perma bull. You're just looking at facts and figures and numbers, and that's how you judge on what to buy, sell in your newsletter, and how you make your forecasts. We have a 10-year bull market right now. In the past couple of weeks, we've seen the market come down and trade wars and stuff like that. But what are some of the risks you see to the current bull market? Because I know you've written about this, and I know, like you said, you lean more bullish long term, but there are a lot of risks in the marketplace. I guess you could say there's always risks in the marketplace. But what are some of the things that can really derail this economy that you think?
Yeah, I do look at those things because my newsletter is called Forecasts and Strategies, and there's nothing more valuable than someone who can predict a crisis or a bear market. It's difficult to do. I see three potential fears out there that could cause us to end as mother of all bull markets, which I've been fully invested. I'm still 100% invested at this time. But the three fears I have is, one is the Fed reversing from an easy money to a tight money policy. And there's some evidence that they're doing that with the slowing of the monetary aggregates, the money supply, as well as raising of rates. Although they're now tempted to even lower rates, and they've certainly postponed raising rates. But Fed policy has always been the real negative, especially an inverted yield curve, which we have a modest example of right now. And the second one is socialism. You see examples of this in Europe, and certainly Venezuela is the worst case scenario. If there was a stock market in Venezuela, it would be down 90% at least. And so regulations, high taxes, and so forth, and I think we need to be a little bit careful about Donald Trump being supposedly a very free market capitalist type of guy. I mean, some of the things he's been favoring here with his protectionist measures and going after, Amazon and attacking, now they're talking about antitrust against some of these big tech companies. This is not the sign of a free market, pro-free market capitalist. So I am a little bit concerned about that. And the third factor is the geopolitical crises that, military action, wars, some type of action that could, an outlier, an errant state, the instability that we're seeing in Venezuela and in Iran, and the proposed views of China and North Korea. These are hot spots that we need to be concerned about that could cause the market to head south, especially after, like you say, 10 years plus of a major bull market. So, bull markets climb a wall of worry. The market has not fallen dramatically, but what we saw at the end of last year is something that could happen if some unexpected event happens or the Fed overreacts or what have you.
Yeah, definitely a lot of risks in the marketplace. And I want to go back to the economics part because, you discussed a few things on the macro level, but I wanted to go back to, because you're currently teaching. And for me, I'm a huge fan of economics. I'm a diehard. But when I was in college, they would teach me things like bell curves. They would teach me, supply, demand, lines all over the place, which isn't bad for diehards, but kind of boring for the average folks. When I look at economics, and I say this a lot in my podcasts, it's about everything you do in your life, right? If you're buying milk, our price is higher. There's lots of houses for sale in your neighborhood. The more houses, less houses, your tuition, electricity, healthcare bills going higher. Your neighbors buying new cars, stores packed with, with people, the stops, the place that you shop at. I mean, there's just so many things. Even when I get off a flight, I'm always asking the cab drivers, how's business, how's everything. When you teach it, I'm curious to know, because it's such a fascinating subject to me if it's taught right, where How are the kids responding? Are you seeing more kids go into economics? Because back in my day, it was just the way it was taught was kind of boring, but yet I just find it so fascinating that this is the field that I think there's so many, even the millennials, that can really get into, and it's also a good paying job.
Yeah, so I've been an adjunct professor. I have so many activities I'm involved in the real world, but I do want to have one foot in the academic world and spend time with students, and it does give me encouragement to spend time with young people and see their eyes light up when I've told them something that they hadn't thought of before. Or I say, put your economic cap on and let's analyze this statement by a socialist, or somebody wants to favor the minimum wage or what have you. And you see the light go on in their mind, realizing that this is not something that would be a good thing. So I wished everybody could take courses in economics, especially from free market economists. There aren't enough of them, I'm afraid. But, business and finance in particular, I think, is the area to go into. Economics is unfortunately become a sideshow of mathematicians. And I think that's really hurt the profession in terms of its practical value. The introductory courses are really valuable to learn supply and demand and the importance of economic growth and what drives the economy. And of course, I'm arguing that it's on the supply side of conservative free market economics. So what drives the economy is entrepreneurship and savings and capital formation and technology, and that comes on the supply side. And I use the example of Seattle, where you look at companies like Boeing and Microsoft and Starbucks and Amazon. That's what's made Seattle prosperous, not that they pulled out their credit cards and went out on a spending spree. So it's important to teach these principles, but I think it's a little bit of an uphill battle when you see that 30 states recently had referendums raising the minimum wage, and they all passed. And it just demonstrates that it's going to be difficult to teach people sound economics from time to time. But one of the reasons I do my FreedomFest conference is we get a lot of students who come to that, a lot of adults where they can learn. We need to come together to learn more, not just give speeches and give our political views, but we can actually learn new ways of thinking and become more intelligent in our decision making, whether it's in business or politics or in life.
Mark, let's talk about your Freedom Fest conference, okay? You called the world's largest gathering of free minds. There's thousands of people that attend this conference. You're the producer of this event. I guess before we go any further, talk about how this whole thing started. I mean, and how humbled are you how big this conference has gotten over the years as you have actors, billionaires, market experts, historians, leading CEOs. You have a lot of speakers at these conferences is absolutely incredible.
Yeah, including yourself coming for the first time. We're very excited to have you.
Thank you. I appreciate that.
As a matter of fact, I felt for some time that we were gradually losing our freedoms, whether it's financial freedom or political or economic freedom with higher taxes and regulations, where everything is, we live in a world where more and more everything is either being regulated or prohibited, or we're being forced to or mandated. We're being squeezed from both sides, from prohibitions and mandates. And my thinking was, why don't we have a national convention where we address these issues, and it's all about freedom, and we call it Freedom Fest. And I started this when I was the president of FEE, the Foundation for Economic Education. And we had our first conference in Las Vegas. We had 750 people. And now it's grown. It's not part of FEE anymore. They're one of the people invited, along with Cato and Heritage and Reason and all the other freedom organizations, the Students for Liberty, Americans for Prosperity, Heartland Institute, the Manhattan Institute. It's just a wonderful gathering of free-thinking individuals, gathering the usual suspects, if you will, and and it's really growing. We we have 2,000, 2,500 people coming from all over the country and all over the world, and we have it in Las Vegas. So it's an intellectual feast in the entertainment capital of the world. Nobody's ever bored because we have numerous breakout sessions. We have debates. We have a mock trial. We have the Anthem Film Festival. We have music and dance. We celebrate liberty. We're there to learn from each other. We're there to network. And we always have top entertainment and keynote speakers. We've had William Shatner. We've had George Foreman. 3 or 4 years ago, we had Donald J. Trump himself at the beginning of the election. And we have over 200 speakers every year. We have all kinds of activities. So the idea is there's strength in numbers, and a lot of us get pessimistic and we think that we can't make any changes. But when you gather together the group like this in Vegas, and we're coming up next month on July 17th through the 20th at the Paris Resort, we'd love to have all of your listeners sign up and join us. Hear you, myself. We have Kevin O'Leary of Shark Tank as our keynote speaker. John Mackey, the CEO of Whole Foods Markets, is there all 3 days. We have Steve Forbes. We have a 3-day investment conference that is really tough to beat. I mean, it's just a wonderful experience to meet people. And if people go to freedomfest.com and look at our website and look at the quotes from people and all the different lineup of speakers and panels and debates. It really is an incredible event, and we were approaching 1,000 people already, and we usually double that. It's amazing how many people sign up at the end. And our hotel room block is filling up, so it's going to be filled in the next couple of weeks. So it would be great to have everybody who's interested to join us at that point and be a part of this big event.
And you do a good job where you said the networking and also the entertainment part, which is important because so many conferences, you've seen so many speeches too. Sometimes people just read off their slides. I mean, but you have the entertainment factor. Talk about the theme, which you're excited about, which is the Wild West theme.
Yeah, every year we have a theme that's different. Like one time we did "Are We Rome?" Another one was "We're Headed for an American or a French Revolution." One time we had one on the American Dream. Is the American Dream still alive? This year our theme is the Wild West, which I think is a great theme because with Donald Trump in office, it is kind of a Wild West. You never know what's going to happen next. And it's an exciting time period. And so we're having quite a few Western type of themes. We're even having a square dance. We have for a Saturday night banquet, you have the Amish Outlaws rock and roll band that's playing, a real great dance band. We just want to cover. I'm going to give a talk on Jack London, The Call of the Wild, and we're going to talk about the history of gold mining, how the West represents freedom, moving away from government control and so forth. So we have the free market environmentalists coming from PERC in Montana. We have a lot of debates. We're going to have this, what we call the libertarian duel in the sun between John Mackey of Whole Foods and Kevin O'Leary of Shark Tank. And for those of you who are familiar with Shark Tank, you know that Kevin O'Leary calls himself Mr. Wonderful. It's really Mr. Shark, who says the only purpose of business is to make money. If you want a friend, buy a dog. So he's a really interesting, hard-hitting. He's giving a talk called "The Cold Hard Truth About Money and Business," and then he's going to debate John Mackey, who says that business has a much higher purpose, that it's about the heroic, the beautiful, the true, the good, and it's not just about making money. So that's going to be a fun debate as well. We're going to have a debate on the trade war between Steve Moore, who's defending Trump's trade war, and GMU professor Don Boudreau, who's very much against it. We're going to have a food fight between vegans and those who eat meat. We're going to have a God, no God debate between a believer and a non-believer. We're going to have Justin Amash coming, who's going to defend his argument that Trump has committed impeachable offenses. So a lot of people find him to be very controversial. So he's going to be there, as well as Candace Owens, who's a black conservative who has taken on Congress and the Democrats there. Our mock trial is on the Second Amendment. So we have a lot of fun things that we do at the conference. So I'm sure you're going to enjoy it. And we have people who come back year after year because of how everything is so different. You know, my original purpose is to create a conference that I would like to be at, because I'm sure you're aware, you've been to many conferences where you're bored to tears with the speaker and you go out and just spend time in the exhibit hall. But at FreedomFest, people are, we have 10 breakout sessions and they're all on different topics. So there's something for everybody.
And I want to talk to you about that really quick, because as someone who's been in this industry for such a long time, follow economics, politics, Washington, the lineup that you have, right? I mean, you just mentioned a lot of people. There's diehards, there's gold bugs, there's people no regulation ever, and conservatives and people all the way to the left.
Anarchists, we have them all.
And yet you could have them on stage and have a cool conversation where they're not going to kill each other, right? Which is not, that's what we're there for, right? You want to hear a different opinion than what you have, right? Maybe you don't agree with it, but you kind of respect it, and you have this whole conference. Why is a conference like this, you could see that happen, and almost throughout anything, right? You could see that happen where there's negotiation and you respect people's opinion. But now when it comes to politics, and how bad is it today? Because for me, I've been arguing that this is one of the biggest risks of Washington, where nothing's going to get done, where the two sides actually hate each other. I don't know if it's driven by the media, whatever, but even the heated conversations you have with friends these days, it's so emotional right now. Have you seen that in your career? Has it been this bad? Again, for me, I'm pushing 50 and really studied politics the last 20 years, but for someone who's followed Reagan and followed, presidents in the past, have you seen it this bad, where people actually, there's so much hate when it comes to politics? There's no negotiation. There's no fun. People can't discuss and debate.
Yeah, that's another reason we started FreedomFest, was because we wanted civil debates. We actually had Paul Krugman come and debate Steve Moore on economic policy, and he was it was a formal debate where each one made their points. They didn't talk over each other. They didn't interrupt each other like they do in Fox News and CNN. It was just, in fact, Paul Krugman left that conference with a very much more positive view regarding libertarians who were respectful and civil. And we try to avoid labels as much as possible. We avoid the left-right dichotomy and try to, if we believe in individualism, then why shouldn't we treat people as individuals? And so we have people of all different beliefs, and we, right from the get-go, tell people to be civil with each other. It sometimes does get out of hand, and politics is one of them. We've had some brouhahas over Trump and so forth, but they're memorable, and people enjoy the debates. They don't go away angry at the world, and that's one of the real positive things. You walk away with a very positive feeling about America and where we're headed after coming to FreedomFest. The other thing that we do that's really unique is we have no green room. So speakers are attendees, and attendees are speakers. We have you may sit down next to a Steve Forbes or a John Mackey at a session. We really encourage our speakers to attend, and I know you were planning to come for the entire conference to get the whole experience. So we prefer that. And yeah, we have a few people who come in, give a speech, and then leave. But Steve Forbes said he was going to do that initially. The very first time I invited Steve Forbes, his secretary said, no, he has to come in, give a speech, and then leave. That's his mantra. And she called back a week later and said, Mr. Forbes has looked at your schedule of all your speakers, and he's changed his schedule, and he's attending all 3 days. So that was a real endorsement of the program that we have. So I think you'll find some real optimism there. While people will disagree and so forth, there's a feeling of warmth and camaraderie that has been missing in politics and in Congress certainly for some time. So it's really I'm looking forward to getting your response.
No, and I think you're going to get a good response from our list, because I know there's a lot of people interested in this conference. I know they talk to me about it, and they're really excited that I'm speaking at it. And I want to end with this, Mark, because we didn't get a chance to talk about your newsletter, which is Forecasts and Strategies, which is a cool newsletter with an income focus. But I like reading your macro thoughts and your comments and how it filters down to the micro individual names that pay dividends. I guess talk a little bit about that newsletter, because I looked at some of the things that you're investing in, and I was wondering, just on the income side, which interest rates are low. It's not as easy to find great stocks that pay high yields, because there's a lot of money pouring into them, and then they have to take on a little more risk. They're a little expensive because interest rates are so low and people are dying for yield. But yet you found a lot of interesting stocks that have done well. Talk about a little bit your strategy with that newsletter.
I am concerned. You mentioned that dividend stocks are very popular these days. I mean, I speak at the money shows and the New Orleans conference and my own conference and so forth, and it seems like everybody's talking about dividend-paying stocks, income. People are seeking income. Well, why? Because the alternative of Treasury bills is not very appealing. It's hardly going to keep up with inflation, even when the rates have gone up a little bit. So I think you have to be very selective, and I have a program where I look for three things. One is quality. They have to be quality companies that are making money and are in a growth industry. That's really key. So it can't be in a dying industry. And number two, I want an above average yield, which is not difficult since the average yield is 1.8% on the S&P 500. So, 2, 3, 4%. I find ones with 6% that are sustainable. That's really key. You have to make sure that the dividend isn't going to be cut. And then the third criteria is I look for a rising dividend policy. So when you put those three together, I think what you come closest to peace of mind investing, or sleep well at night investing. It's not going to protect you completely from a bear market, but it's going to cushion the fall, and to know those dividends are coming in is going to be very positive. So, I reduced my portfolio to like 4 or 5 stocks. There aren't very many out of all the ones, the criteria that are in a burgeoning market, making money, above average yield, and a rising dividend policy. When you put all those criteria together, how many stocks qualify? Now, granted, I don't get in on Amazon. I don't recommend, or I didn't get into Apple and so forth, because for years they didn't pay a dividend, so I miss out on those opportunities. But a lot of people don't realize that for every Apple or Amazon, there are hundreds of so-called growth stocks that go nowhere, or who run out of money and go out of business. So we avoid those kinds of situations, and it's a really good strategy for people who are looking for income, for retirees, people who have been successful in business and don't want to lose it. Because I've met a lot of people who were very successful in business and then got into the wrong stock, or a money manager that managed their money till it was all gone. That's really a sad situation. I'm sure you've met people like that who have really been hurt because they thought that making money was easy in the stock market, and it's not.
No, it's definitely not. And I guess we'll end with this, because we talked about certain risks that you see in the marketplace. But where do you see the market even a couple of years from now? Because I know that you consult for Fortune 500 companies, you've done that in the past. Where do you see, you see your long-term bullish overall, but where do you see the markets going over a long period if you would advise your clients over the next 3 to 5 years? Because, we have trade, which this problem may not exist a year from now, just like sequester and all that disappeared. And it's just amazing the risk that we see that we amplify so much. Probably not going to be risks a year from now. I'm just curious what you see with the long-term, and of course you're looking at Fed policy and things like that. But what's your prediction, which is hard, but for the next 3 to 5 years?
Well, I like to look at the mega trends, and in fact, that's going to be our theme for 2020 at Freedom Fest. Is since it's 2020, what are we going to focus on the future? And I'm going to try to gather together all the forecasters who have done a good or a decent job of predicting the future. So all the doomsday crowd it's going to be hard to find invite
exactly.
them to this conference because they've been wrong for so long. But nevertheless, you do want a Cassandra or two who have done a good job in predicting these things. But one of the long-term trends that people are ignoring is the huge pool of savings that are developing from the baby boomers. So they are saving a lot more than they're spending. And according to a number of studies, this trend could mean lower interest rates for quite some time, that we may not have seen the bottom of interest rates, believe it or not, that this is just a jump up, but you've already seen long-term rates dropping again. That's very bullish for once we resolve these trade policies and maybe some of the geopolitical crises. I mean, how low can Venezuela get? It can only get better at this point because it's such a disaster. So I do think that we have potential for another spurt in the stock market, and we may be in the middle innings instead of the end of the ball game, so to speak. So I think that's a really positive factor here. There's always some things that you never want to put everything in a bullish scenario. You do want to hedge your position because it's hard to predict the unpredictable, whether it's a crisis of one sort or another, or Fed making a bad mistake. And nobody likes to see their portfolio lose 50% of its value, and that seems to happen once every decade or so. So I'm cautious. The best I can recommend, we do have a gold position now, but it's in Franco, Nevada, which is a finance company of mining and so forth, and it has done well recently. So we do protect ourselves, or we hedge our position, but we're staying primarily in these income-producing investments. I think that's your most conservative strategy right now.
And I love that forecast, lower interest rates longer term, because you're not hearing that really any place. You're hearing, well, they're low, they might be low for a little bit, but long term rates are going to be much higher. So I actually love that forecast, which is great. Now, if someone wants to find out more information about you, Dr. Skousen, how could they do that, whether it's your newsletter or the Freedom Fest conference?
Well, they could, for the Freedom Fest conference, if they go to freedomfest.com, they can get all the information about that. My newsletter, if you go to markskousen.com, the last name is Skousen, markskousen.com. That gives them all the information on my newsletter.
Well, Mark, thanks so much for coming on the podcast. I've learned a lot. Hopefully you'll join us again, and I'm really looking forward to attending your conference. I want to say thank you for letting me speak at your conference, and look forward to meeting you in person.
Great. Thank you, Frank. See you in Vegas.
All right, great stuff from Mark. And by the way, if you do register Freedom Fest and conference next month, before you check out, there's going to be a place where you can use a code. I'm not getting paid for this. I always try to negotiate deals for you guys where you could charge cheaper prices for newsletters or anything. So they were nice enough to provide me a code, which is Frank in capital letters and 50. So Frank 50. And you can use that code to get $150 off the full price of Freedom Fest. So instead of paying $695 per person, $995 per couple, it's $545 per person, $845 per couple. Again, that code is Frank50 if you register. I'm not getting paid a dime for it, but I wanted to, and I like doing that for you guys since you always listen to the podcast to provide the best deals possible. Because if people are going to talk about their conference and I'm giving them, a chance to talk to my audience, I want to make sure that they provide special deals for you. Because again, we're all in this to learn about the markets, to learn. It's a great conference, like he explained, where you're going to get a different opinion. You're going to have great debates where people aren't killing each other and arguing and things like that. And I'm really looking forward to speaking at this conference. It's going to be a lot of fun, and also meeting Mark in person because I know so much about him. And it was great to really talk to him this week, which is and get to know him. And again, I'm honored to be speaking at that conference with a lot of really, really great names. So again, if you guys register for that and you go to freedomfest.com, just make sure you use that code Frank50. This way you get $150 off, if you decide to attend the conference, which again is being held in Vegas. I love having old school analysts on the show. Because I grew up in the industry and know a lot of those great players and legends. Still get to see them on TV sometimes. They don't make as big appearances. It's a lot of fun. And I like Mark a lot. Very smart guy. And again, I'm looking forward to his conference. With that said, listen, this podcast is about you, not about me. Let me know what you thought about it. Interview at frank@CurzioResearch.com. That's frank@CurzioResearch.com. And let's get to our educational segment. Hey, Garrett, did I say that twice in there when I said with that said? I feel like I said that twice. If I did, could you take one of those out?
Yeah, sure.
Just right. It's all in that one segment. I might have said that twice.
Yeah.
Okay. I'm going to keep going. I said, now let's get to the educational segment. Okay, here we go. So Cypress Semiconductor is one of our holdings in a portfolio. Recommended it in January 2017. It's a company that I was very, very high on, that I love. It's a semiconductor. And when it comes to the semiconductor industry, you have to be very careful because you have NVIDIA who basically makes parts for the high graphic gaming cards and stuff like that. Now it's a big market, especially during crypto. They were getting an extra bonus. And they were increasing market share because you need the top of the line fast computers to really mine for cryptos. Again, that cooled off a lot, right, over the past through 2018 and 2019. But still, that's like high end where it's not so much because eventually these things, it's almost like a commoditized business, right? And prices go lower and lower and lower. So you always try to find, new ways to improve those margins, new products or whatever. But Cypress always had a great balance sheet, a great management team, and they were in the key areas, which is important when you're investing in chip companies. Like Intel I've been a big fan of, and they're transferring, again, into old school and computer stuff like that, and PCs, and getting more into AI and a whole bunch of other different markets. It's slower than I thought. I thought it would be a lot faster. That's why the stock's gotten hit lately. But long term, that's what they're doing. But Cypress right now is one of the key players in autonomous driving, industrial, which is smart factories, which are being built like crazy by Fortune 500 companies, biggest companies in the world. And most important, it's one of the best plays specifically on the Internet of Things because they make chips, or the best chips in the industry, that basically, if you look at that, they help every device connect to Wi-Fi and Bluetooth. But the reason why they're best in class is because they found a way to have these chips where they're using very little power, which helps conserve battery life. And we all know that's a big deal considering most phones have terrible battery life. So anything that connects to the internet, almost anything, is going to have, Cypress chips in it, so they can have exposure to. And when I went to the conference, which is a consumer electronics show, which I go to every year, and I think it's like 7 or 8 years we're on, I always stress the importance of boots on the ground. And what does that mean? That means traveling to places, talking to people. And the CS is cool because you have all these companies, and again, there's so many of them, and I've been going so long, I have great contacts, and they tell me exactly where to go, what's the most important technologies, what's getting the biggest buzz, what's winning the CES awards, and getting into meetings, thanks to you, because the podcast is getting bigger and bigger, that I am able to get a media badge. And when people see media, they always want to talk to you. You can cut lines and talk to the main people and try these technologies out, which, again, time is a valuable commodity. I want to see as many companies as I can. This way I can report back to my subscribers. So having those boots on the ground and going to Alaska, going to Switzerland, going to Europe, traveling, just being in the room, speaking at conferences, that allowed me to build my network and over 25 years. And it's very big now because as you know, I interview a lot of great people on the podcast, and they become friends for life. And analysts across every single industry. I've interviewed billionaires, heads of states, CEOs, everything across the board, which is great. But it always leads to new ideas. And it's so important when it comes to boots on the ground because you got to get out there. You're not going to find new ideas by sitting behind a desk and you listen to somebody or somebody probably has a huge stake in it. You want to get out there and see these technologies. Sample them, talk to the people, because when you go to Consumer Electronics Show, you have all these booths, right? All these displays, And of course, you have the booth babes, right? So if you have Intel or any of the big companies, they'll have 20 girls who are all models, and some of them, very few of them, know about the company. But as soon as you'd go up to them, they'd be like, "Hi, I don't know anything. Let me introduce you to somebody." Get away from the booth babes. If you like that, you like that. That's fine. I'm talking about stocks and making money here. You want to get past them. And when you get past them, the employees in there are brilliant. And they're running separate divisions, or maybe the vice president of separate divisions, but they'll sit there and talk to you. And the information you could extract for them, I mean, that's their job. The Consumer Electronics Show, they want to tell you everything about their new products, is absolutely amazing. And I remember 2013 when I went to the Ericsson booth and I talked to leading engineers there, great guy. And I was like, what inning are we in when it comes to cloud computing? And again, few people knew what cloud computing was back then. I think it was 2013, 2014. And he's like, we're not even in the first inning. You have no idea. I said, really? And this is when AWS was really, smaller, not really taking off. Look where Azure, Microsoft, and cloud in general, and how big it's gotten. But I was just surprised that he said that. And he's not talking his book or anything. He works at the company, but it's not like he has a massive stake in all these, cloud computing companies or anything. He was just saying, hey, he was real. You could tell. He was just like, it's very early, and people don't understand how this is going to be the future. But I would have never learned that unless I go there. Now, when I look at a company, Cypress Semiconductor, it just got acquired by a company called Infineon for $23 and change. It's a stock that we had in our newsletter, and I think our cost base is around 10 and change, so it's more than 100% winner. That 10 and change includes the dividends, which we've had since 2017. It does pay a solid dividend, great cash flow, growing, one of the cheapest stocks, and 4 months ago, I actually wrote to my subscribers saying, look, at this level, I wouldn't be surprised if someone comes in and takes them over. And that's what happened, because they weren't really getting the fair value of what this company was worth. And they put themselves up for sale. There was rumors, and it went from like 14 to 17. And then Infineon came in and said, we're going to pay over $23 a share for you. And I always thought it would get more than 23, almost $24 a share is a great find. Now, when I went to the Consumer Electronics Show in January 2017, the biggest theme by far was Alexa. And you say, well, Alexa was, 2016, almost 2015. And you're right. But 2017, from someone that's been going to these conferences, you had, Google's virtual assistant, you had Apple's. And the year before, they displayed all three, and you saw all the products, whether it's Honeywell had a display there, any of the smart cities, or everything was, you could use those devices to really program and use them through, which creates, smart homes and things like that. So it was a big deal, the virtual assistants in 2016. In 2017, a big deal for me is there was no Google Home there, very few. Apple's gone. Nobody's paying attention. Everything was Alexa. Everything. No matter what technology came out, it works with Alexa. We have smart faucets, bathrooms that are smart, works with Alexa. Every part of the house, anything that plugs in, anything that uses batteries, it works with Alexa. That's 2017. So for me, one is Amazon you can see the clear leader. Now they're into a growth market where every home is going to be smart eventually, because everything, whether it's washing machines, refrigerators, they're all becoming smart, and they're going to be able to connect to Alexa if you want the Alexa. Some people still scan them, whatever. But when it came to Cypress, not only are they in Alexa, which was selling a record amount of devices in 2017, but they're in just about any device that's going to connect to the internet. And everybody was connecting everything to the internet with the Internet of Things technology and using Alexa. So Cypress, when I went back and looked at it, I said, wow, this is the best play by far on this, and they don't have to worry about, handsets, mobile phones. That's a mature market. You want to be careful. In 2013, Cypress kind of reminded me of Skyworks, because in 2013, I saw Skyworks, it was about $28, $29 a share, and I just came back. I think it was in 2013, 2014, and that's when the Internet of Things trend first started. And Skyworks was really into mobile. Mobile was growing. iPhones going crazy. Samsung as well. And recommended Skyworks, and it went over $100 a share. It was a big winner for us. The reason why I like Skyworks is because I had a couple of bad quarters before, and it fell. It was trading, I think, $50, $60, and it fell. Same with Cypress. The company fell. It reported a bad quarter. They were just restructuring, and the restructuring, when I looked at the numbers, margins were going to explode higher. earnings were going to surge, like they're growing 5 times faster than the market going forward. It was a dirt cheap stock, and you don't see really dirt cheap stocks with that are expected to grow and have huge growth potential. And you don't see that. Usually they trade at more expensive valuations. So I felt, the value would eventually get recognized. I thought it'd be 18 to 24 months, and it took a little bit longer than that. But we made out, and it was a great gain, right, compared to the overall market. So we're taking about 115% returns on it, I think. I'm not here to pat myself in the back and tell you that I had a winner. It's more about the importance of being in the room. Guys, you could all do that. And I'm not talking about that you have to really go to attend all these conferences, which can be expensive, but even when you're recommending a retailer, go to the stores, ask questions with the employees. They know a lot of stuff, no matter what it is. If it's a supermarket, go there and ask things. Support. I mean, there's so many products sold through these stores. Are they selling more of them? But ask a lot of questions. When you get off a plane and you're taking an Uber or taxi, talk to the driver. Hey, how is it? Is it busy? Yeah, it's crazy here. I mean, for me, with all the emails that I get from everyone, and a lot of you business owners, and the reason why I've been so bullish on this market over the past 5-6 years is from hearing from you. Business has never been this great. It's awesome. I mean, you get tons of customers, generate more revenue. And 90% of the emails, we're talking about thousands and thousands of emails have come in. And when I travel, I'm talking to these cab drivers. The conferences are packed and hotels are packed, construction everywhere. Maybe this blows up in your face later on, but, having that real world analysis and being able to talk to so many different people and email me, it's, for me, I'm reporting the data back to you and saying, hey, guys, listen, the housing market's great. There's low inventory. People trying to buy homes and they can't. Home prices are going higher. They're tailing off a little bit now. But having that network is absolutely amazing. And for you, just get out there and ask a lot of questions. It's important because also in that issue, I recommended another stock. And it was a trend that I saw, which was getting very, very big, and that's drones. And around that time, and this is 2017, so like the year before, it really got crazy. There was drones everywhere, huge, small cameras. And you saw drones showing up in Walmart's, Targets, so the consumers are starting to buy them. And then I said, let me look a little bit more into this trend. I found AeroVironment. The stock just got hammered down, I think 40% from its highs because the company said, look, we're not going to focus too much on the consumer market because we don't think that's a big growth market. And they were right. I mean, people are not buying tons of drones right now. You see them all. You saw them. I probably see less now than I did 2 years ago. But they said, you know what? We're going to really focus on government orders and building drones for governments, again, governments that are friends with us, as well as the U.S., where there's drones that have capabilities that have eye recognition technology on their cameras that could give you face recognition from a mile away, and they have missiles and could blow up a terrorist or blow up something. You have counter drones, right? So and when you look at the defense spending, which is something I always focus on, because even when it came to the sequester, I don't want to get too far off point here. Sequester is basically cutting the budget in the government and a lot in the Defense Department. But one area that they're spending a ton of money on is drones. Why? Because you could send a drone there and you don't have to worry about anybody dying, and it could, create a lot of damage. So it's just an area in defense where they were spending a ton of money on. I'm looking at AeroVironment going, wow, this company's taking one step back to go, 5 steps forward. We recommended that company the same issue, and that stock's up 150%. So we took profits when it was up about 105%. We took half off the table. The other half's up 150%, a little bit more now. And the only reason why I found those two stocks and we're able to research them is because I went to Consumer Electronics Show, which I do every single year. This year I went again. I recommended another stock, and it's a stock that I'm sure nobody ever heard of that's in the portfolio that's doing well, is doing a lot better. But look, the last 6 weeks, everything's down other than the past few days. But long term, it's just a fantastic company. It's unbelievable. It's something I never heard of. It's a foreign company that has an ADR that you could buy, but it's just, the technology that they have is unbelievable. And they just came out with a new device that is a backlog for 9 months, 10 months, which is unbelievable. But it's a great company. It's awesome. But the importance of this segment is, guys, it's very easy to do this. It's just a matter of you putting the time in. And remember, you're investing your money. This is your money that you want to build up. You want to retire, hopefully build a big enough nest egg. You're going to leave it to your children, right? Generational wealth. And when you think about that way, you want to do everything you can to know all the information possible on what you're investing in. And do that. Make some phone calls. And people love, especially, The IR departments, investor relations. I mean, call them, ask questions, talk to them, see if you can get someone on the phone. What's the worst they could say? No, you're an idiot. Big deal. All right, you hang up the phone, fine. You go, eat popcorn, watch TV. But you're going to get that guy to come on the phone or the girl to come on the phone and give you a ton of information about the company, maybe invite you to their next annual meeting, get to learn a lot, meet new people, networking. But that's how you find the best ideas. You can't do it sitting behind a desk. And we saw that with these two companies. And again, I talk about my losers just as much as I talk about my winners, probably even more. But I can't stress the importance of this. I say it all the time, boots on the ground and being in the room. And, Marin Katusa says that as well. I can't stress the importance of that because you see the difference in your portfolio because you've done more work on these stocks than anybody else in these investments. So for me, I'm always comfortable giving these investments out because that's how much research it takes to really dig in and find good ideas. But that happens really, most of those ideas that I'm finding is because I'm out there speaking at so many different conferences, visiting these companies. In Vancouver, 3-4 times a year. In New York, probably 5-6 times a year. Always meeting with hedge fund managers, different people, finding new ideas. That's what we do. And that's what I want to bring to you with my newsletters, which, by the way, I'm still getting a lot of calls and emails, mostly, calls for customer service, where, frankly speaking, we put behind the paywall. So we're just getting a lot of questions from a lot of people who don't own any of our products. And I'd rather just focus on the people who really pay for our products. And our cheapest product is the Curzio Research Advisory. And we have an offer. It's a Curzio offer. So CurzioResearchOffer.com, and charging $49 for the year for that newsletter, which, I assure you we're not making a ton of money on. But for me, I like, more like an introductory product where you're going to have lots of new picks, pretty much mid-cap, large-cap picks in that newsletter. So you get great research, 10-page research reports. But for me, I like charging that price because during my 25-year career, the way I was able to build up my network is by doing the right thing. And I had a little bit of rant on that a couple of weeks ago, Dominican Republic. My daughter got sick and they didn't do the right thing. But you do the right thing, for me, it always comes back 10 times over. So for us, charging $49 for the year for that newsletter, and it also gives you that entitlement of being able to ask me questions. And, I'll take those questions and answer them on Frankly Speaking. But Frankly Speaking is behind the paywall now because I'm still getting some questions. Where is it for the free people? Well, if you're a paid subscriber, you have access to it. It's on our website. And guys, feel free to ask me questions. You guys subscribers, send them in, frankcurzioresearch.com. Getting back to the boots on the ground thing, guys, you know how important it is. Everyone could do it. Anyone could do it. But make sure you put that time in, especially when you're going to buy stuff. If you're a trader, it's different. You're looking at just, you don't even care what the company does. You're just looking at price levels or whatever. But from a fundamental side, you want to get out there. And Mike Alkin does a great job as well, going different car lots and saying that the car companies and the suppliers are going to get crushed and the whole Tesla thing. I mean, the amount of research that he has done. And I love to see that in our industry because you see that in hedge fund world. You don't see it too much in financial newsletters where, look, people just writing to you and new ideas and they can get them anywhere. It's good to see pictures of that editor that you're following that's in the field. He's giving you information you're not seeing anywhere else. It's original. But that's what you want. And the only way you get that type of research is if you get out there, if you're in the room and you have your boots on the ground. So guys, pretty cool podcast today, right? Talking about a little bit of old school. Sorry if I got a little bit emotional there, but you know how much I love this industry. And Mark's great guests. Looking forward to FreedomFest conference. If you guys want to register, again, you can go there. Make sure you use that code Frank50. If not, no worries. I'll see if I can get a replay of it or whatever, but I'm not sure that can happen. But for those of you going to Vegas, definitely stop by, say hello. I love speaking to subscribers in person. It's it's actually an honor, something I love doing. So with that said, that's it for me. Thanks so much for listening. Really appreciate all the support. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.